Hey everyone, welcome back to Corporate Decoder, the place where we decode the latest financial news. And buckle up because today we're diving deep into Tutor Perini Corporation's latest annual report. This company builds big things and their financials reflect that complexity, but we're going to break it all down simpler than ever. So, Tutor Perini, a big construction company, just dropped their report for the end of 2025. What is the story? Well, they're back in the black, which is huge, and they've got a massive amount of work lined up for the future. But how did they get here and what does it all mean? Let's find out. First off, let's talk about money. The company pulled in $5.5 billion in revenue in 2025. That is a big jump, a 28% increase compared to the previous year. Think of it like this, for every dollar they made in 2024, they're making almost $1.30 now. This surge is thanks to more projects moving along, especially newer, bigger ones that are still in their early stages. It's like a construction company hitting its stride with a lot more work ahead. And here is the really good news. They went from losing money in construction operations last year, a loss of over $100 million, to making a profit of $232 million this year. That's a dramatic turnaround. Imagine going from having to dip into your savings every month just to cover bills to actually having money left over. This improvement is due to better project execution and fewer of those big, unexpected charges that hit them hard last year. We're talking about fewer costly legal battles and disputes. This improvement translates directly to their earnings per S-hair. They went from losing $3.13 per S-hair to making a profit of $1.51 per S-hair. This is a huge change for anyone holding their stock. Now, what about the future? Their backlog, which is basically the total value of work they have lined up, is strong, reaching $20.6 billion. That's up 10% from last year. However, the amount of new awards they won in 2025 was $7.4 billion, which is less than the $12.8 billion they won in 2024. This might seem a little concerning, but it is important to remember they also had some really massive projects awarded in 2024. They're still winning a lot of business, and the projects they're getting are big and long term. Think of it as them not landing quite as many huge contracts this year, but still getting plenty of solid work for years to come. Looking at their business segments, the civil part, which handles things like highways and bridges, is the biggest chunk of their work, making up almost half of their total backlog. The building segment, which does everything from hospitals to detention centers, is also a major player. And then there are the specialty contractors for things like electrical and mechanical work. This diverse mix is good, spreading their risk across different types of projects. In their civil segment, revenue jumped by a massive 34%, setting a new record for them. This is where a lot of their big infrastructure projects are, and it shows they're successfully executing them. And that revenue increase translated into record profits for the civil segment too, jumping by over $250 million. This is a really strong performance, fueled by those large, high-margin projects we mentioned. The building segment also saw healthy growth with a 15% revenue increase. They're seeing strong demand in areas like healthcare and education facilities. And importantly, they turned a loss in the building segment into a significant profit this year. A huge improvement that shows they're getting a better handle on their projects in this area. The specialty contractor segment had an even more impressive revenue jump of 43%. This shows how vital their in-house specialized services are, especially as they tackle larger, more complex projects across all their segments. Now, not everything is sunshine and rainbows. Their corporate, general, and administrative expenses shot up significantly, more than doubling from $110 million to $210 million. A big reason for this is a surge in share-based compensation expenses. Basically, as their stock price went up a lot in 2025, the value of certain stock awards they'd given out also went way up, making the company owe more in that category. This is a bit of a paperwork thing that made their reported expenses look higher, but they expect it to calm down in the coming years as those awards vest. On the bright side, their interest expense went down considerably, dropping from $89 million to $55 million. This is largely because they paid off a big chunk of their debt early. They also had more other income, likely from investments or other financial activities. Now let's touch on risks. Every company faces them, and Tutor Perini is no different. They highlight the usual suspects: economic slowdowns, unforgiving construction schedules, and government contract uncertainties. A big one for them is their reliance on government contracts, which make up a large part of their business. Any changes in government spending or funding can hit them hard. They also mention that if they can't get surety bonds, which are like performance guarantees for projects, it would severely impact their ability to win new work. Plus, they deal with lots of legal proceedings, and an unfavorable outcome could cost them big time. And in today's world, cybersecurity is a constant concern, which they are actively managing with dedicated teams and regular testing and training. It's clear they're aware of the challenges, like the difficulty in accurately estimating contract risks or dealing with disputes. These issues have bitten them before and could do so again. Now, for the auditor's stamp of approval, Deloitte and Touch LLP gave them a clean bill of health on their financial statements. This means, in their professional opinion, the financials are presented fairly and accurately according to generally accepted accounting principles. They also signed off on the company's internal controls over financial reporting. That's a good sign that their financial house is in order. The auditors did flag revenue recognition for construction contracts as a critical audit matter. This is because it involves a lot of estimates for future costs, revenues, and potential disputes. It requires significant judgment, which is common in construction. And auditors have to put in extra work to ensure these estimates are reasonable. It is a complex area, but it is important for a company like Tutor Perini that works on long-term multi-stage projects. They also detailed a long-running dispute about the Alaskan Way Viaduct project. It sounds like it was a major headache with lawsuits against the state, insurers, and designers. While settlements have been reached with insurers and the state dispute is concluded, they still have a substantial claim against the designer. HTB Corporation seeking over $300 million. This case is still ongoing and could have a significant financial impact. Let's look at the financials again for 2025. Total revenue was $5.5 billion. The civil segment brought in $2.8 billion, building accounted for $1.8 billion, and specialty contractors added $844 million. These numbers show how each part of the business is contributing to the overall picture. In their other comprehensive income section, they're showing some positive movements. There are gains from pension plan adjustments and foreign currency translations. These aren't directly tied to daily operations, but are still good signs from a broader financial health perspective. Looking at their immediate financial health, their working capital is strong at $0.9 billion. Their current assets are 1.27 times their current liabilities. That means they have more than enough liquid assets to cover their short-term debts, which is a sign of financial stability. Now, here is my take on Tutor Perini. The company has clearly turned a corner financially. Moving back into the black with such a significant profit increase is a major accomplishment. Their civil segment is a powerhouse, setting records and driving a lot of their success, likely boosted by ongoing infrastructure spending. The building and specialty segments are also showing solid growth and improvement, which is vital for diversification. The risks are real, especially with government contracts and the inherent uncertainties of large construction projects. The ongoing legal battle with HNTB is a significant concern that investors will be watching closely, and while the increase in corporate expenses due to stock awards is understandable given their stock performance, it does highlight how volatile some of these accounting figures can be. Despite those challenges, the sheer size of their backlog and the continued demand for infrastructure and construction work paints a positive picture for their future. They're a major player in a massive industry, and their ability to secure large complex projects is a key strength. So, what is my conclusion? Tutor Perini is on solid ground, showing strong operational execution and financial recovery. While they operate in a high-stakes, high-risk industry, their current trajectory suggests they are navigating it well. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.